What is going on YouTube? It's Sankey. We're back with another one. Alright guys, so I'm coming at you with a couple of plays that I think could double by the end of the year. So I'm going to make sure they're on your radar. And I'll be teaching you guys the charts again in this video, just like we did yesterday and for the rest of this month, to ensure that we're elevating your investing game to the next level. So I've got a jam-packed one for you in this video. So do make sure you stick this one all the way through with me. Now guys, before I get to it, I'm going to need you to hit that like button for me. And if you're new, hit that subscribe button, join the journey. As you guys know, I say you should keep at least 1 to 5% of your portfolios in crypto. That is one of our mega trends, and there's a lot of good gains to be had there. So before we jump into our main event, let's kick things off with this play. Up on screen, that's Argo Blockchain, ticker symbol ARB. Now this is our UK listed Bitcoin mining play. You guys know we've been in this one for a while now and made some good returns off them. As I say, you should keep your portfolios between 1 to 5% in crypto. There's a lot of good gains to be made there, and it's one of our mega trends. And if we just touch on overall portfolio diversification, you guys should be keeping tabs on how exposed you are to the different sectors. This is going to allow you guys to spot those opportunities and load up on those plays where you're underexposed. Now, as I say, there's still some great gains to be made in crypto if you're able to hold through the volatility. So if we look on chart, after the big run up that Argo's had, there was a lot of panic selling because of fears that Bitcoin was crashing. That came tumbling down to 70, and now we're making our way back up to 100. Guys, you always know I say stay calm, cool and collected. This is a key trait that you guys need as investors, and it's going to make you a lot of money. So just over the last 24 hours, Argo have gone out and released their January earnings, and they come in at 2.5 million in revenue versus December month of 1.5 million. This is a 40% increase month on month. So they are flying when it comes to top line growth. Their margins are also improving, clocking in at over 70% versus 60% in December month. Now you guys know I always say we are looking for those plays that show that top line growth in revenue, but also they're becoming more profitable. If you can find a combination of the two, you have a great play on your hands. Now, this company is in expansion mode. They've gone out and acquired 2 data centers which hold a lot of their machines. Now, this is going to allow them to improve that 71% margin even further. So the big kicker with our Argo play and our other Bitcoin mining plays is they are in rapid expansion mode. Now, we know that Argo have gone out and made a purchase order for 10,000 miners. They've received over 1,000, and the rest of those are going to be rolled out in February and later in the year. Now guys, this is going to significantly increase their revenues, and when it does, it's going to increase that stock price. So make sure you guys have Argo Blockchain on your radars right now. Up next is Riot Blockchain, that's ticker symbol RIOT. Again, this is a play that I want you guys to keep your eye on. Another Bitcoin miner that's in rapid expansion mode. Now we know they have an order placed for 15,000 miners that's going to be rolled out this year in May and October. Also want to put on your radar that the largest pension fund in the US has increased their position in Riot 7 times over. So you guys know that everyone's looking for a piece of this growth. Now let's talk strike price on Riot. If you can catch them under $20, consider loading up on this play as they continue to roll out their miners, and as Bitcoin continues to show momentum, they'll be onwards and upwards, testing their all-time highs of $30. Next up, we have our main event, that's Marathon Patent Group, ticker symbol MARA. Now we've already 10x'd our money on this play. We found this diamond in the rough when they were sitting at $2 back in November, and this is the Bitcoin mining play that I'm the most bullish on going forward. Now right now, Marathon Patent Group is sitting at around $2 billion in market cap, but I'm going to give you guys a couple of reasons why there's a lot more room for that to run up. The first is the strength of their balance sheet. They've just gone ahead and purchased $150 million worth of Bitcoin. Now they also have 100 million left from their stock offering of 250 million, and they have 450 million in cash already sitting on their balance sheet. So they have a $700 million strong balance sheet at the moment. Secondly, they're on a mission to be the world's largest Bitcoin miner. We already know they've made their purchase order for 100,000 miners. Guys, if you just compare that number to the 10,000 for Argo, the 15,000 for Riot, it just puts that number into perspective. They got 4,000 rolling out this month and another 11,000 rolling out next month. And this is going to take their daily Bitcoin mining capacity from 2 Bitcoins right up to 60 Bitcoins, giving them around 700 million in revenue on today's Bitcoin value. And thirdly, there's a potential that they multiply up their revenues if the value of Bitcoin increases. Now remember, they're sitting on $150 million worth of Bitcoin on their balance sheet, so this will also increase. So Marathon Patent Group is looking like a strong cryptocurrency contender as we go through this year. Now guys, let's talk strike price on our play. If you can catch this one under $21, consider loading up on them. Now remember, you can use the investing tools available for you to automatically buy that stock when it hits the strike price. So let me show you. We hit buy, you head over to limit, select the number of shares you wish to buy, And down at the limit price, we're going to select our $21. Review order, send buy order. So now it's time for our session on chart analysis. Now yesterday we brought out that Fibonacci retracement tool, and I'm happy that that went down well. I received a lot of great messages from you guys. So today we're looking at the Fibonacci fan, which is going to allow us to determine where the support and the resistance lines might lie for some of our plays. Up on screen we have Gevo. Now this is one of our channel MVP penny stock plays. If you don't know Gevo, they're a sustainable fuel producer. So right now this play is down 2.7%. Now as an investor, if you're wondering where next for this Gevo stock price, you can use the Fibonacci fan tool to give you a perspective of where it might head next and where it might find its support and where it might find its resistance. So if we go ahead and apply that to the graph, so what you want to do is you want to start the tool before the run up and end at the top of the run up, and then it produces a series of lines. So as you can see, when that stock has come down, it's hit that first support line, come back up to the resistance line before coming back down, breaking the support line before heading down to the next support line. And as you can see, it's trading in this channel here. So if we use the Fibonacci fan tool, this gives us an indication that potentially this Gevo stock price might trade between this support line here and this resistance line here. And as it's doing so, it's staying true to this theory. Now hopefully you guys can now see how using that Fibonacci fan tool can give you just a guidance on where that stock price might go. Now you always ask me, how do I set my strike prices? Well, the Fibonacci fan tool is just one of the many tools that I use to set the prices. Because if you think about it like this, if I see a stock and it's trading in a channel between its resistance and its support line, well, there's an opportunity to grab that stock at a cheaper price when it comes down to its support line. Now, as I said, it's just one of the many tools that we use to analyze these stock prices, and you shouldn't rely on any one single tool. You should be using a collection of tools and different analysis to base your decisions on. But you guys know I come on here each and every day to help you, guide you to get you to that finish line of building wealth in that stock market and becoming the best investors you can. Alright guys, if you've been rocking with the channel, you know what time it is. Now this question comes from Tolu. He says, nice one Sankey, your plays are always quality. Question, when is it the best time to take profit and how do you do that on 2-on-2? So I know a lot of you guys are new to the channel, so I'm going to give you the highlights to my selling strategy. First off, not all investors are the same, so there's going to be different strategies that are going to be applied. So we're going to categorize them into two types of investors. The first investor is a short-term investor. Second investor is a long-term investor. Those short-term investors, you might want to get into a play in a week's time and get out, maybe a month, maybe 2 months. And ideally, don't want to go through too much short-term volatility with that stock. The long-term investor, they can get into a play and they can ride out any waves in that stock market for an eventual higher price. Me personally, I'm more of a buy and hold type of investor. I can ride out the short-term waves in that play because the plays that I give you guys on this channel have a lot more room to run up. But if we look at the short-term investor now, I always say if you see a play running up 30%, that's the point where you start to consider taking profits. It doesn't mean you take profits, it means that you just have it on your mind and your strategy is set and ready to go. Now, as a short-term investor, there's a couple of things you need to keep a very close eye on as that stock price is running up. That's going to help you determine your selling strategy. The first is the valuation as that stock is running up. Now, you guys know I always say take a look at that market cap to sales ratio. That's going to tell you how cheap or expensive that stock is. Now, some of these stocks, when they're running up, that valuation is blowing up. So the second thing you guys need to keep a close eye on is the catalyst that's pushed that stock price up. You guys know that we have the factual catalyst, that's to say a company has earned X amount of revenue, for example, or more speculative catalysts like it's coming out with a new technology that is going to increase its revenues. The revenues haven't increased yet. And the third is the velocity of the run up, how quick that stock is moving up. Is it moving up 100% in a day, 150% in a day? Now, if you have the valuation is blowing up to the point where it's out of kilter with the rest of the industry, it's a speculative catalyst that's pushed that stock price up, and you have the velocity is extremely high, like that stock has gone up 100, 200% in a single day. That is the trifactor right there that's going to let you know that that stock price is going to come back down. There's going to be some kind of correction, some kind of sell-off that's going to push that stock down. And it could be in the region of 20%, 30%, 40% or more. Now, hopefully you would have recognized that early and be able to sell out somewhere near the top before that stock comes back down. Now, if we switch over to the selling strategy of a long-term investor, I can give you various plays like a Gevo, like an American Battery, like an Orbital Energy Group, which had very nice run-ups, but I always knew that that stock would come back down slightly, anywhere in the region of 30, 40%. But as a long-term investor, a long-term hold, I'm happy to ride out that short-term fluctuation in that stock, because I know that by the end of the year, they're going to finish higher than they were before they had that drop off. Now, one strategy for a long-term investor is you can take some profits as you see that stock running up. So you can go ahead, take out 10%, take out 20, and then to maximize your returns even further, when that stock is dipped down, you can then use the tools that I've shown you guys to try and time that bottom of the dip and buy in again. So the second part of your question was, how do you go ahead and take profits on trading 2-on-2? So what I'll do is, down below in the description, I'll leave a link to a video that I did recently showing you guys how you set up that stop limit. That's going to increase your chances of selling out of these positions if there's some downward volatility. Alright guys, so that wraps things up. Do hit that like button for me, it really helps the channel out. And if you're new, do go ahead and hit that subscribe button, join the journey. Also check out the link down below to the Patreon, where we enter more plays over there and you could be part of our investment community. Now I'm going to try and circle back with you guys tonight, because a couple of our plays have got some interesting updates that I want to make sure is on your radar. So I'll catch you on the next one.